Hi guys, welcome back to another episode of Singaporean Talks Money. So I'm hoping that all the content that I've been putting out has been informative for you guys. If you like what you have been seeing, do give a like, subscribe to my channel, and without further ado, let's move on to today's topic. So today I'll be talking a bit about Boglehead 3-fund portfolio, and mostly about why I chose VT and VOO, which is the Vanguard Total World Stock ETF and Vanguard 500 Index Fund ETF for my regular savings plan. So I have moved towards index investing since the end of 2019 because of work commitments that take up too much of my time. It has been a good choice so far, with both my Vanguard 500 Index Fund ETF VOO and Vanguard Total World Stock Index Fund ETF VT in the green. Although my STI ETF and tracker of Hang Seng Index, which I bought for a short period of time, is in the red. So I was really interested in entering the US market as I want to grow my capital and also have more exposure to the different markets. I came across the Boglehead 3-fund portfolio, and in that is a very simple investment strategy in which basic asset classes are used. So the 3-fund involves firstly a domestic stock index ETF, and then the second fund is an international stock index fund, and the third is a bond index fund. So in the case of Singapore, a domestic stock index fund can be SPDR Straits Times Index ETF, which is ES3, or the Nikko AM Singapore STI ETF, which is the G3B. So an international stock index like Vanguard Total World Stock Index Fund ETF, VT, is listed in the US stock market, and you can also purchase that, but it has the 30% withholding tax on dividends, which most people avoid, and instead they go for those listed on the London Stock Exchange that attempts to achieve a similar goal like VT, but reduces the dividend withholding tax rate to 15%. So the third fund will be like a bond index fund, like ABF Singapore Bond Index Fund A35. And with that proportion, you can decide your asset allocation between the stocks and the bonds. And following the asset allocation, you can rebalance once or twice a year by seeing if the stock or bonds portion differ to your original asset allocation and buy or sell some of the stock or bonds. So in terms of asset allocation, a very traditional way of having an asset allocation is to first have your age in bonds. So for example, I'm 25 years old this year. So I would have 25% of my money in bonds and the others in stocks. So when I was first exposed to the 3-fund portfolio, I liked how it was simple and so easy to implement. Definitely on my end, I wasn't really interested in STI ETF, as I bought it at $3 plus, and it was one of my first investment when I started the POSB Invest Saver, which I'm no longer continuing with. Since then, the growth hasn't been attractive, although the 3% dividends is nice when it comes in. So along the way, I decided to explore an international stock index fund. So I came across VT and looked through the ETF details on the Vanguard website and got particularly interested. So some key points of VT is that it invests in both foreign and US stocks. It has high potential for growth, but definitely it is also high risk, as the share value will swing up and down more so. It has an expense ratio of 0.08%, and it's appropriate for long-term goals. So first, let's look at the performance of VT. So the average annual returns do look to be rather favorable for 1 year, 3 years, 5 years, and a 10-year holding period. So definitely the month end as of 30th September 2020, the 10 largest holdings definitely are very familiar companies, and it's pretty similar to the holdings in S&P 500, except for maybe Alibaba, those that are not commonly seen, or like Tencent and Taiwan Semiconductor, because this is a world stock ETF. So in terms of market allocation, definitely it still holds a large portion in the United States, with 57.4% in US stocks. The rest are divided among other countries, as you can see. So for me, I also started buying VOO, the Vanguard S&P 500 ETF, in my regular savings plans quite recently. So what VOO does is that it tracks the performance of the Standard & Poor's 500 index. It tracks the 500 largest US companies and is a gauge of the overall US stock return. And it has an expense ratio of 0.03%. So in terms of performance, the average annual returns, you can see it's really double digit and very nice compared to the world stock ETF. This is because the US stock markets definitely has a large population dabbling in it, and so the returns can be attractive, although definitely if there is a loss, it will be also pretty large. So for VOO, the 10 largest holdings, as you can see, most likely all the companies there, everyone has heard of it before. And yeah, so with all the information that I was presented with about VT, I found it to be something that I'm willing to buy monthly and slowly. Only recently did I start adding VOO as well into my regular savings plan. So I'm currently not adding any bonds to the portfolio because firstly, my capital that I'm putting every month definitely isn't that large. So I don't want to split it into 3 different funds and lose out on the commission charges as well. And also because I'm young, I feel that I can take on more risks, and so currently I'm not adding any bonds, even though in the next few years I might add it into the portfolio. So I don't understand that the dividends are eaten up by the 30% withholding tax, as VOO and VT are both listed in the US. Currently I'm not so concerned about it, as I want a regular savings plan that is automated, and in a sense the one that I started only offers these two. So I hope that you have liked the information that I've given in this video. Do give a like and subscribe to my channel for me to give more content to you guys. Thank you.